And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell with a global simulcast. Carol Massar and Tim Stenovec join us. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. Another interesting day in the market, Carol Massar. We should point out, we started bombing Iran back on, February 28th. Yep. The S&P 500 at one point, through from there all the way down to the end of March, fell 8%. We have now rallied about 7% off of those lows, including a 2.5% gain here on this Wednesday afternoon.
So everything's awesome, right? Everything's fixed, everything's done. Close the books on this one. We know that that's not the case. We've seen some back and forth, but it is interesting to see that it's not like all of a sudden markets have undone the enthusiasm that we've seen today. Even energy markets, they're still down. Oil's down a lot. So, yeah. That's kind of where we are.
I'm glad you went to oil, because even though the S&P 500 and the NASDAQ have recovered somewhat, oil is still a far cry from $60 a barrel, with WTI and Brent both above $96 a barrel. So maybe that's the place to look for how investors are thinking about this fragile ceasefire.
How about the bond market, Tim Stenovec?
That's a great place to look.
Good.
Because you take a look at what the 10-year Treasury yield has done on an intraday basis, a total U-turn when it comes to the benchmark there. So bond traders really giving up those gains that we saw, definitely out of step with what we saw with the equity market today, which pretty much has been resilient through all of the back and forth.
Yeah, we should point out the VIX down around 20. The Bloomberg Dollar Spot Index losing about 0.8% on the day, pretty much erasing most of the gains for the year. And of course, we're going to talk a lot about where energy prices themselves are, as you alluded to here, down significantly on the day, down more than 10%, but still up about 40% or so from where we were prior to the start of the war. The Dow Jones Industrial Average adding 1,300 points here on the day, or roughly about 2.8%. The S&P 500 up 166 points, or 2.5%. The NASDAQ Composite and the NASDAQ 100 each rallying about 3% on the day. And you see the Russell 2000, the S&P 400 mid-caps each up about 3% as well.
All right, let's go back to the S&P 500, if I may. And you've got most names, no surprise, as we've seen really a risk-on rally take over on this Wednesday. Katie, 421 names to the upside, 81 to the downside, and you've got one unchanged.
Let's take a look at the sector level because it is so telling, the fact that you have 10 sectors in the green, a bright green there. The lone slice of red.
Wait, can I guess which one?
Yeah, please.
Oh, actually, it's right there on the screen.
Yeah, it's energy. It's down 3.7%. Your biggest gainer in terms of a percent change today was industrials. That sector higher by about 3.8%. Communication services, materials, consumer discretionary, but still across the board, huge gains.
All right, guys, let's go to some of the individual gainers, if I may. Just bringing up my list, Meta among them, at its highs up about 9.5%, finishing the day with a gain of about 6.5%. Was a best performer among those Mag 7. It debuted its latest AI model. It's called MuseSpark. It was created by Meta Superintelligence Labs. MuseSpark will power the Meta A chatbot and is a closed model, meaning its design and code will not be made public, unlike the company's prior open source strategy. We've seen Meta and Mark Zuckerberg, really kind of refocus that company on AI. The model is the first major test for Zuckerberg's new AI lab and is seen by executives as a refresh of Meta's AI strategy, with several larger models in development. So again, some outperformance there. We were just kind of joking, right? And we've talked about this before, the metaverse. It's in the past. It's all now about AI for this company. All right, let's talk about airlines. Katie, you talked about what happened in the energy sector. A couple things going on in this space. If you look at the S&P 500 Super Composite Airline Index, all 9 members were higher in today's trade. The group overall up 5.7%. Delta, also an outperformer, up about 3.7%. Delta expects to incur more than $2 billion in higher fuel costs through June because of the U.S. war in Iran, prompting the carrier to tread carefully, stick, though, to its previous full-year profit forecast. So no update there. The company, the CEO, Ed Bastian, telling reporters that earlier that it's looking to do more fare increases beyond what it has already levied. Airline shares, though, globally surging today after President Trump agreed to that 2-week ceasefire in exchange for Tehran opening up the Strait of Hormuz. We know, though, throughout the day we got pushback from Iran, so we're still kind of questioning where that is. But nonetheless, the group holding on, for the most part, its gains. And then flip it on over to Levi Strauss & Company. That one up 10% in today's session. It was up as much as 16.5% intraday. It's most in a year on an intraday basis. Company boosted its adjusted earnings per share and revenue forecast for the full year. Also reported first quarter earnings and sales that topped estimates. And the company's CEO joining us here earlier on Bloomberg Business Week and just saying that all categories are doing really well and looks like the momentum is expected to continue. We should put out the CFO, longtime CFO there for about 10 years, Harmeet Singh. He is going to be transitioning away from the CFO position and leave the company. But this is a guy that really has been crucial to turning around this company and really bringing it back as a public company.
Also wears a lot of denim.
He does.
Like all
That
of them.
tracks.
Yeah.
Don't we have denim on today?
Like,
Like,
but
below
like
the
not like the
desk?
Levi's, the Levi's executives, the Levi executives.
Oh, yeah.
Anyway, one sector that did not do well today was energy. ExxonMobil shares fell by 4.7%. Energy stocks fell after the U.S. and Iran agreed to this 2-week ceasefire in exchange for Tehran reopening the Strait of Hormuz. As you've been following all day, there are questions about to what extent that ceasefire is holding and to what extent traffic is actually flowing through the strait. Meantime, ExxonMobil shares fell after it's announced that it lost 6% of its global production in the first quarter due to the war in Iran. The company said 2 LNG production lines at a facility in Qatar were damaged by Iranian missile strikes, and the damage will take a prolonged period to repair. Also under pressure today were shares of fertilizer companies. CF Industries fell by 5.7% today. The 2-week pause in the U.S. and Israeli war on Iran could lead to lower chemicals and fertilizer prices if supply disruptions sparked by the war ease. CF Industries is a large producer of chemicals that go into fertilizer, including ammonia, urea, and more, a large producer of nitrogen-based chemicals. That fell by 5.7% today. And have you guys ever been to Kura Sushi, ticker KRUS?
I have.
You have been to it?
No.
Oh, you haven't? Okay. 88 locations, 22 states, and Washington, D.C. Romaine, have you been?
I have not, but I've been following this story.
They've got hundreds of these locations around Japan and around the world. It's like an automated sushi bar revolving. It's
Yeah, I've seen it.
It seems pretty cool, actually.
Yeah, I've seen the one in D.C., yeah.
Yeah, shares tumbled
it's like,
today.
Somebody, puts their hands on that little dirty conveyor belt.
No, they put their hands on, there's a lid, you pull off the lid, you pull the plate out, then you put the plate onto this conveyor belt when you're done with it, and that counts the price.
You really researched this.
Yeah.
Sometimes you got to watch YouTube videos at your desk. Sometimes you got to do it for work.
Why are shares down 18%?
Shares fell the most in close to 2 years. The company said that the company came out with its annual guidance. That disappointed some investors. Management said on the call that given the war, it felt it was, quote, prudent in terms of its guidance to just add the upside from second quarter results, but not to extrapolate further from that. So a little uncertainty about consumer spending as a result of the macroeconomic backdrop.
And that is your update there on what's going on in the sushi world.
Yeah.
Let's check in on yields once again. When you look at where yields actually ended on the day, and you see that unchanged there on that 20-year there, it gives you a sense here that nothing happened, but it was an incredibly volatile day. We came into early this morning with a lot of buying in the Treasury. In fact, a lot of buying globally with regards to government bonds. At one point, we saw the 2-year yield actually drop about 6 basis points, and I think we saw the 10-year yield drop about 4 basis points. But of course, that was completely reversed as we move closer to the closing bell, and we're basically unchanged across the board as a lot of people really questioning what actually comes next.
Yeah, and I guess, I don't know. I was thinking about the S&P NASDAQ 100, well off the oversold position. If you look at something like RSI, Relative Strength Index, it's actually closer now to being overbought. And so I kind of think about this bounce. Is it fundamentally based? Is it just reactionary to headlines? And I think, again, I'm thinking a lot about the earnings season and what we get, like we got from Delta. What do we get in terms of outlooks? Ed Bastian not changing his outlook, not updating it, not changing it at all. So what kind of transparency or outlook do they feel comfortable committing to? I think that will be certainly key, especially as they try to make sense of the headlines that continue to come out about this war.
Yeah, it's notable to hear from consumer companies. It's notable to hear from a company like Levi's against this backdrop. They argue, and Michelle Goss argued this on our program, that they have so many affordable price points and so many different price points that they can kind of hit the consumer wherever that consumer is. But I guess I'm interested to hear from the big banks next next week. JP Morgan, Bank of America, they have such a real-time view on the consumer. What are consumers doing with their spending? If they're spending more on fuel, where are they pulling back? And what does that do for these company earnings?
That's true. I mean, the banks, as you say, they do have a unique perch there when it comes to the economy. But you know that the banks, at least their trading desks, have to be making money hand over fist right now. You think about this volatility that we're seeing in the market. Yeah, you know, you put your hand over the fist.
And now you have more money.
That's how you do it. I will say, just quickly to Carol's point on whether this is fundamental or something else going on, there was a really interesting note out from Goldman's trading desk division, basically saying you take a look at hedge funds right now, they are covering their short bets to the biggest extent since about 2020 or so. So I'm really interested to see how this rally develops, whether or not it can sustain itself over the next few days or so.